If you've been following the real estate market, you know that rates are up and potentially continuing to climb. Hey, it's Brittany Pino with Brittany Pino Associates Real Estate Firm here in Baton Rouge, Louisiana. And what people are talking about a lot right now is the Buydown. The 2-1 Buydown is one popular financing program that is allowing buyers to get in with a better rate. And I want to explain that to you, how that works, and also what the costs are associated with a 2-1 Buydown. So the example that I have here today is for a $550,000 house at a 7% interest rate, and assuming that the buyer is putting 20% down, and so they will finance the 80%, which is $440,000 at 30 years. The way that the 2-1 Buydown works is that essentially you get 2 points off the first year and 1 point off the second year, and then it will end up at that prime rate that it was whenever the buyer locks the rate. I'm only using this as an example. Certainly you would want to check the rates before you would use this formula. So first year, the buyer's interest rate would be 5% if the prime rate was 7. So first year at 5%. The way this looks is year one, their note would be $2,362.80, which is their note based on $440,000 financed at 5%. Year two, their note would increase, and the note would increase to that 6%, so it'd be $2,640 year two. And then by the third year, it would adjust then back to whatever the prime rate was 7%. So the note would be $2,926. Now, keep in mind that this is only principal and interest. This does not include escrows like taxes and insurance. Certainly, if you're putting 20% down, you typically have the option to escrow or not to escrow. But this is only principal and interest. Now, how much does it cost? What we are seeing is that it is something that the seller would need to pay for in order to get this to happen. And so we are seeing sellers a lot more negotiable right now in this market. So the way that it works and the cost associated with this is this. It is the difference. So you take what the note should be at that 7%. So in the first year, you subtract that. So the difference is $563 that first year times 12 months. And so the cost, or the difference that the seller makes up for that first year, is $6,758 for the first year. And then the difference of what the note would be, but with the 7% minus the second year, the difference is $286 a month that they're saving times 12 months, which is $3,432. So then you'd add those two numbers up, this and this. So this is the cost for the Buydown of the first year, the cost for the Buydown of the second year added together. The total cost to do this 2-1 Buydown based on this scenario is $10,190 at a cost to the seller. You know, what I'm seeing is that to reduce a sales price by $1,000, for every $1,000 the sales price is reduced, it saves the buyer roughly $5 a month on their monthly note, $5. So if you came down $10,000, that's 10 times 5, you're saving about $50 a month if you got your seller to reduce $10,000. Depending on the situation, depending on what the comps look like and how the home is priced, it may be a better option for the buyer to keep the price as it is and bake in enough money for that seller to then pay for the 2-1 Buydown. I think the hope here is that the buyer, that the market will have, rates adjusted, the rates will decrease, and then they could refinance. I am also under the impression that this money is not lost if the buyer does refinance. It's held in escrow, and it would be applied to the principal balance when they do the refi, and deduct from the principal balance if they chose to refi before that 2-year time frame, if for some reason the rates went down and they were able to take advantage of a lower rate. Otherwise, the buyer needs to be sure, and certainly the lender wouldn't approve, but the buyer needs to be sure that they are fully aware that their note eventually, by the third year, would adjust to that higher note based on that prime rate that was in effect whenever they locked and closed on the property. So hope that explains the 2-1 buy down. You might have to watch it again to kind of slow it down a little bit for the breakdown. But essentially, the 2 is for the 2 points below prime. And so that is how that works. If you have any questions, we certainly have preferred lenders we can get you in contact with to help you get into a property. This may be a little helpful for you to do in order to buy you a little bit of time if you are in the market to buy. You can call, text, email, or visit our website at brittypino.com to schedule an appointment. Have a great day.